Hi guys, welcome to the Rise of Bitcoin webinar. I'm Nicholas, and on behalf of Track Record, we'd like to thank you all for taking the Thursday evening out to join us. Bitcoin, as the webinar's title is, has had a meteoric rise in 2020 to say the least, and it has made a lot of headlines as we come to the end of 2020 with a lot of institutional adoption in the space. And I hope today's session will shed some light on the asset. And we have some very established individuals from the institutional space at the end of the webinar to talk more to us about Bitcoin. Right. So before we go through with what we have in store, some disclaimers. So, of course, whatever we say does not constitute to any investment advice or recommendation by Track Record, and the views and opinions expressed are purely for educational purpose only, and we accept no responsibility for any decisions made as a result of what we shared tonight. Right. So, for some housekeeping matters before we start, if the Zoom screen is blocking any of the content you see on screen, you can always move it by dragging the box from the top right. And also, for any questions that you have for us during the webinar, you can feel free to type it into the Q&A, and then we'll address it later on in the webinar if time permits us. Right, so without much further ado, we'll begin this. So I'm Nicholas, your moderator for this webinar. I started in 2016 in Chantillium doing research and AI for machine learning. And currently I'm running a asset management firm. So we do global macro investing. We also run one of the largest Bitcoin mining farms in the world from a matter of hash power. And also we develop Bitcoin and blockchain solutions for institutions as well. And also a trader and mentor at Track Record to help students progress in their trading career. So on the other hand, joining us in the first part of the event is V, the CIO and founder at Track Record, who has a very established career in finance, starting way back in '98, and then in the early 2000s, leading teams in Morgan Stanley and Deutsche Bank for trading in Asian markets. And also in 2016, he came back to Singapore to found Track Record Asia. So the agenda for today, we'll go through what is blockchain and what is Bitcoin, difference between Bitcoin and other cryptocurrencies, why is Bitcoin different today, and why is it being called digital gold, and why Bitcoin skeptics are wrong, probably in the long term. Right, so before we begin, can we kindly do a poll for the aforementioned questions?
I think that's good, huh? Let's go.
Right. Okay, so B, please join us in this first part of the discussion.
Okay, so hi everybody. Good evening from Singapore, but I think we have people from various time zones anyway. So thanks for joining us today. As Nick has said, we're going to go through some fundamentals about Bitcoin and why we believe that it's going higher. And at the end of it, we'll take some questions. But at any point in time, please type in the questions in the chat boxes that you have, and then we'll address them as and when it's convenient. And later part, the second part of the webinar, we'll have a panel discussion between Justin and Dan Wang and myself with Nick on more pertinent matters around the industry, players in Bitcoin and cryptos. So let's start off with the basic things, right? Nick, maybe you can quickly explain to everybody what blockchain is and how it's is relevant in the discussions that we're going to be having.
Right. So blockchain is basically the basis of Bitcoin, right? And for everything related to crypto. So in layman terms, blockchain is an immutable store of records, right? That is cryptographically secured and openly verifiable by anyone. Hence, this is the allure of blockchain, right? As it is an openly decentralized system that works on a consensus agreement. So what makes it so secure is that it is impossible for bad actors to exist on a network unless on a basis of collusion. And the thing is, it's game theoretic, right? Because if they collude on the network, then it is self-defeating because the network will then be abandoned and no one will use that protocol anymore. So blockchain basically is a architecture for immutable records of transactions, which exists on the internet.
Yes, that's good. And Bitcoin essentially is built on this technology, right? And its primary utility, primary purpose of Bitcoin is to be a non-sovereign monetary good. And Nick, you can further explain too.
Right. So Bitcoin basically leverages on blockchain technology, right, to solve an ancient problem of how civilizations they transport or transfer economic value through space and time, right? So historically, because the lack of technology, gold did a job, and in modern times, Bitcoin is taking over gold in that regard, and that's why they call it digital gold. And Bitcoin's initial purpose by Satoshi Nakamoto, although no one knows who that is, right? He introduced Bitcoin very aptly in 2008 after the GFC. He designed Bitcoin with the sole purpose of taking power back from the institutions and the governments, right? And that is why Bitcoin is doing very, very well at this point in time amongst the millennials and Gen Z, because it coincides with what you're seeing right now across the world, the rise of the NPA establishment and people valuing privacy over big tech, right? So that is the purpose of Bitcoin, and it solves a lot of the issues that we are facing today. So that is what it is, right, as an asset class. So Bitcoin versus other cryptocurrencies in the space, a lot of people confuse what is the difference between Bitcoin, right? They think that other applications are a lot faster. It's a lot better than Bitcoin. Then Bitcoin is probably the slowest tech of them all, right? But the fact of the matter is that Bitcoin was created not as a utility function, right? It was created solely for the purpose of being a monetary good, right? And that is why Bitcoin places security and cryptography over every other thing, which is speed and utility, which other cryptos other cryptos try to achieve, right? So, for example, what you have for payments, Ripple created a payment system to solve the solution for fast transactions. So their initial goal was to take over, semi-take over part of the SWIFT payment system, right? And then we have Ethereum, of course, the second most popular crypto, which was actually built to be a utility platform for many other protocols to be built on top of it, like CryptoKitties, right? So why people use blockchain for goods in games is because in these days, if you play Fortnite or if you play many games, digital avatars or digital goods within a game can actually be worth a lot of money, and people do not want replica of it, right? And that is where blockchain comes into gaming. And of course, we have users for it in medical as well, storing medical records on blockchain, which is very sensitive. So those are the purpose of the other blockchains protocols, which is not designed to be monetary good. So that is what makes Bitcoin different from other cryptocurrencies. And one of the key reasons why there's a very valid argument in the space of why blockchain technology is actually not suitable for a lot of things is because the success of an application is an oxymoron, right? Because if your application is successful, then a lot of people will come onto your platform to use your application, which in turn increases the fees of using your platform, which drives people away from your platform, right? So your success is self-defeating. And what happens, or what a lot of these tech companies do, is they try to centralize it by moving to proof of stake or they use a centralized organization like Infura for Ethereum to fast track transactions, right? But all these compromise on the security of the blockchain, which then is the antithesis of why you would use a blockchain in the first place, right? And that is why the case for using blockchain in many things does not really stand. But for monetary good like Bitcoin, then it makes sense, right? So that is the difference. Any comments on this, V?
Essentially, yes, you've pointed out correctly. What what we have seen is that as more users come online to use these blockchain applications, especially Bitcoin, the transaction fees increase and the speed of transaction decreases for each transaction, each transfer. And this has been pointed out by many that it's the weakness of Bitcoin and it's not scalable. But of course, it is not meant to be a medium of exchange. It's just meant to be primarily, as we said, a store of value. I don't think even then it's a lot faster than transferring money via the bank system in the first place. So I will address that later on, but essentially you're correct. Bitcoin is different in the sense that it is not meant for, unlike Ethereum, it is meant for the purpose of building other applications on top of the protocol, right? So,
Right. So why is Bitcoin different today? So we try to use a model to put some context around why it is different. And a model that is being referenced widely within the Bitcoin community and even in the institutional space is the stock-to-flow model. It's pretty simple, and it's a model that is being used in traditional commodities. So it is not a model that is specifically designed to measure or to value Bitcoin, right? It just happens that people assume that Bitcoin is a commodity and they use a commodity valuation model to superimpose Bitcoin on top of it. And what you actually see is that Bitcoin actually tracks the stock-to-flow model extremely well. So giving more credence that it's actually a digital gold and commodity, right? So so basically how they do it is they take the total amount of Bitcoin float divided by the new production per year, and that's what you get, right? So the higher the stock-to-flow ratio of something, the more valuable and more scarce it is. And Bitcoin has been following this very well. And of course, if things continue on this trajectory, then things are going to get quite exciting for Bitcoin, right? So using this as a context, then we can understand why Bitcoin moved through states, right? And why we say it is different today is because with each halving, the supply shock actually pushes market cap higher, right? And of course, borrowing from George Soros' theory of free reflexivity, attracts a lot of new entrants and a lot of new players, which maintains the market cap at each level, right? So in 2008, of course, you have the Genesis block, which is mined mostly by Satoshi Nakamoto himself because he was the one who created Bitcoin, and some other guys involved like Adam Back, and was the founder of Blockstream, right? In 2010, the fringe communities of the cypherpunks came in and they bought Bitcoin at around 8 cents. And then, of course, earlier on, other people came in at a very low market cap, right? Then the first halving was when you have the more tech-savvy people who got in, like Peter Thiel and the rest, right? They got in around here. And I call the second halving and the third halving, which we are right now, Bitcoin is around $10,000, right? So if the stock-to-flow model holds, then the next halving will see Bitcoin around the same market cap as silver, which is about $1 trillion market cap, which means Bitcoin should be trading about $45,000 per coin. And of course, if the dream of Bitcoin maximalists is one day Bitcoin will subvert gold, right, as the dominant store of value. And if that happens with a $10 trillion market cap for gold, then each Bitcoin is going to be worth $500,000. So this is using the model, which Bitcoin has tracked well. So we'll see in 4 years' time if this occurs, right? So yeah. So why is it called digital gold? It is being called that because Bitcoin shares many attributes with gold. Points winning is that it is a lot more portable than gold. In times of crisis or war, you can't really take like 10 kg or 20 kg of gold and run across the border, right? It's going to be very obvious. It is a lot more verifiable. We have heard news of gold having tungsten inside, right? These guys are quite creative, and that's why that's why Bitcoin is more verifiable, and that's the beauty of blockchain, right? Because it is verifiable by anyone, right? You don't need to go to a special place to verify if the Bitcoins are real, right? It is a lot more divisible. You can actually spend Bitcoins, but it's very hard to spend gold, right? It's hard to scrape gold to weigh to buy things, right? So one of the key points that, of course, we lose out the gold is we establish history, right? Which is basically the Lindy effect. So gold has been around for thousands of years and has served the function of store of value for thousands of years, whereas Bitcoin is only for 12 years, right? So of course, with the age of technology, it's going to only improve over time, and technology is going to be here to stay with us. So if our civilization lasts for another 1,000 years or 2,000 years of tech in place, and probably Bitcoin might be the one that people are talking about in years ahead. So market cap of the industry, Bitcoin is dominant, expectedly so, because they are the pioneer of the industry, with 62% of the market cap. The entire crypto capitalization now is about 577 billion, and Bitcoin's is 358 billion, which represents a chunk. Of course, all the others combined is 151, and the second in place is ETH with a decent market cap of 68 billion dollars at this point. And the institutional players this year, which actually made a lot of headlines, that's why Bitcoin became a huge talking point towards the end of the year, is led by MicroStrategy, right? Michael Saylor. His company was the first to openly announce that he's going to buy a huge chunk of Bitcoin. And he bought about 40,000 Bitcoins over the past couple of months, and then others followed suit. Square, and of course, we have PayPal coming in as a player in Bitcoin space, and Visa. So that's a lot of institutional buzz that we have this year. And and it's interesting to note that they take up 4.2% of the market cap of Bitcoin at this point in time, right? And what we think is that as more institutional players come in, it's going to push up this market cap, right? And that's not even talking about sovereigns like central banks and governments coming in later on in the game. Any thoughts on this, V, for institutional players in this space?
I think what this shows is that these are the first few people coming in. I mean, first, if the pioneer institutions that are coming into this space, and as they get themselves established, essentially more and more will get involved. Of course, we have old school institutions which were rejecting Bitcoin forever. For example, Jamie Dimon, who is the CEO of JP Morgan, says he would sack any JP Morgan trader who was trading Bitcoin. That was just the last year or the year before. But then now JP Morgan is writing reports about Bitcoin, and they're moving into the crypto business as well, right? So essentially, this is the trend that's going to persist in the time to come, with more and more institutional players getting into the space. And this 4.2% of holdings that they have of overall number of Bitcoins that in existence will serve to increase, because they are strong players who hold for the longer term rather than retail players who are essentially trading in and out most of the time, right?
Right. Yeah, I agree on that. And then also, like Ray Dalio, who was a skeptic, is starting to check himself on his comments, right, for Bitcoin in recent weeks. Right. So crypto value and uses in the future. I think people are quite curious on this topic. So I think one of the key things that we need to realize is that Bitcoin mostly at this point in time, the appeals to the millennials and Gen Z, right? And it's interesting because they are one of the largest population base in terms of size. They're 1.2 billion strong, most of them living in frontier economies. And to them, Bitcoin digital tokens are not something new, right? And if you actually look at polls, a lot of these millennials and Gen Zs, they prefer to hang out in games like Fortnite rather than going to Starbucks to hang out, right? And within these games, tokens are very familiar to them, right? And basically, Bitcoin is just an extension of their lifestyle outside of the game, right? And as we move into a world with AI, AR, VR, these things are all part of the huge metaverse that is going to come right in years to come. And there's going to be a huge transfer in wealth as well from the boomers to the millennials and Gen Z in the next decade or so. And that is not including the rise in purchasing power of these guys as they step into the workforce and climb up the corporate ladder, or as they get more senior in the roles, right? So all these pricing power has not been priced into Bitcoin yet. And if you look at frontier economies like Argentina, Africa, there's one documentary on Netflix, Banking Africa, Bitcoin. These guys have had real use cases in these countries where hyperinflation is real, where there is a lot of unrest, and Bitcoin has made a lot of difference in these people's lives, right? And if these countries are familiar with it, then what more do we have, right? Because these are the countries where a lot of the young people are, and they constitute one of the largest populations in the world in time to come. So the adoption curve, this is a very popular model that is being used by technologists to identify at which stage an emerging tech is, right? So I think that Bitcoin, we are in the early majority because the on-ramps for Bitcoin is getting easier. Still not so easy and still not so accessible. Of course, with the entrance of PayPal, Visa, and all these guys, it's going to be a lot easier. But it's still hard to get physical coins, right? Because a lot of these are walled gardens where the coins just exist within the ecosystem of these corporations, and it's not so easy to buy physical coins. Although with a bit of effort, which we will cover at the end, towards the end of this segment, we will show you guys how to get physical coins, right? So I think we're in the early majority. What do you think, Lee? Do you think we are there, or do you think we are earlier than that?
I think that's a big question. We had a bubble in 2018 where it exploded to nearly 20,000, but it was predominantly fueled by buying from the retail sector, the people in general, feeling the fear of missing out, FOMO, and then they piled in, which is the case with most fads and things, right? What Bitcoin has shown is resilient, and we are coming into the early majority where the early majority is the institutions and credible players. So it's not just corporates, but it's also asset managers, hedge fund managers. All right. So I think one question that comes to mind is that many people will ask. In fact, we have one question that says, why do we need Bitcoin in the first place, right? Essentially, there is no utility to Bitcoin except a store of value. So Bitcoin was created with a limit of the number of Bitcoins in existence can only be 21 million Bitcoins. Of course, each Bitcoin can be broken down into small units, but that's it. So if you look back into the slide that Nick was showing earlier about the characteristics where Bitcoin is superior to gold, the only part where it really loses to gold is the history part, as well as the part where gold is shiny and it's physical and you can wear it around your neck if you want and show off to your friends. But when gold was used to be a monetary good, which is a store of value, the attraction was that it is not replicable, and there's a finite amount of it on planet Earth, right? So in a world without Bitcoins, we don't really need Bitcoins, but after Bitcoin has been created, it's become an alternative whereby for the younger generation, especially for the tech savvy, whereby it is a protection against the devaluation of currencies from governments. So it's a store of value in that there's only 21 million Bitcoins if at the end of all the mining activities, right? So what we have is that as people get into the space, the adoption model shows as more people get involved, there will eventually be a network effect where it becomes accepted as an alternative source of protection against inflation, against devaluation of paper currencies. You there's no other utility besides that that is valuable, and in a world where that's why I believe it's become a lot more important these days because of the monetary policies of many central banks around the world. So I believe your question was, is it early stage? I think yes, it's exactly around where the arrow is pointing. I think this the early majority of institutions coming in. There are many skeptics who will come in at the end after everybody has gone into the space. But of course, the market cap of the space will then be in trillions, and of course then there's no more capital gains to be had, right? Yeah.
Right. And one of the issues that comes out a lot with Bitcoin is that it's wasting a lot of energy, right? So to put into context, the energy usage of Bitcoin, what Bitcoin uses is actually a lot of excess energy from around the world. And globally, 8% of energy is being wasted, right? In terms of not having infrastructure to transport energy out. So this is very evident in countries, of course, where miners are, right? In the US shale, in Texas, and in countries like Kazakhstan, certain parts of China, where there is an overbuild of electrical supply, but there is no infrastructure to transport out, right? And this is where Bitcoin miners thrive, right? This is where they go in to use this excess energy. So most of the energy that is used by miners are excess energy. And of course, if you look at the energy mix in Bitcoin, China is the largest one in the world for mining Bitcoin, the US, Russia, and then Kazakhstan, and so on and so forth. So what's interesting, if you actually look at it, is that within China, if you look at it from a micro basis, a lot of these guys are mining in the region of Sichuan and Xinjiang province. And what is interesting about these regions is that it is characterized by a little bit of hydropower and hydro dams, right? And so Bitcoin miners, a lot of them are in these regions using the hydropower. So any argument on Bitcoin's energy usage needs to factor in a lot of these things, which is the type of energy that Bitcoin uses, and also what happens if no one uses this excess energy, right? Where is it going to go? So there's one or two things, right? Either it's going to just be wasted away, or in a world before Bitcoin, or even in the world now, these places also attract a lot of aluminum smelters who go there to use the excess energy, right? So nonetheless, energy will be used, or it'll be lost, right? There. And why a lot of these people are selling energy to Bitcoin miners is because why not convert your oil price to a monetary good rather than just leaving it there or letting it go to waste? So this is the energy profile of Bitcoin, and this is where the protocol thrives on, right? It's solving an energy problem. And what's interesting is that right now in the US, in the Permian Basin and Bakken field, where there is a lot of excess oil capacity, the US is trying to take mining power back from China, and they're offering, and these guys in those areas, they're offering cheap gas in terms of flaring technique to mine Bitcoins, right? So that is what's happening now in the US. Bitcoin is solving an excess energy problem in those places. Right, Lee. So on to you for the global macro perspective for Bitcoin.
Okay, as I was saying earlier, this year we saw an interesting development where old school money managers, legends in global macro, such as Paul Jones and Stan Druckenmiller, coming to say, make a case for Bitcoin. And their arguments is essentially that Bitcoin is a great hedge to inflation because of its finite quantity and its scarcity, its eventual scarcity, right? And what it reminds to Paul Jones of the current situation with Bitcoin is that it's reminiscent of gold in 70s, just when inflation is starting to pick up, and we saw a flood of money going into goods, hard assets to hedge the inflation risk. And then I also think that what has feel this is again, as I mentioned earlier, is because of the monetary policies and the fiscal policies of governments all around the world because of the COVID crisis. We have gone on a spending spree that sees no end in sight until the end of until the spread of the virus is controlled, and until then, the spending by governments needs to be funded by unlimited money printing from their central banks. And because of that, we see asset bubbles developing in all asset classes, right? And because of this, we see interest in finding alternative hedges. And it just happens to be Bitcoin is now accessible and it's become an almost inevitable asset that will appreciate in a world of devaluing currencies. And because this happens, as currencies get devalued, the price of a Bitcoin will grow just from because the amount of currencies are growing in this world. You will see interest being generated by the fact that it is appreciating, right? And because of that, we will see more money coming in, and it's a self-fulfilling prophecy. So if you look, the current Bitcoin market cap is only around $350 billion, and gold is market cap is around $9 trillion, depending on the price of gold, of course. And relative to the stock markets, which is $90 trillion, eventually, of course, as Bitcoin becomes an asset class, is if you say, imagine all these billionaires starts to allocate 1% or 2-3% of their wealth to this asset class, it's just going to grow, right? And it's almost unstoppable unless we see a stop in this money printing. It started on a trend where it is almost unstoppable in becoming an alternative asset class that's going to be used as a hedge against inflation. Let's go on.
Right.
Yeah. Example of the moves. Maybe Nick, you can explain this of the flows of Bitcoins from exchange to private wallets.
Right. So Bitcoin has two groups of people, right? You have the opportunists, which are the traders, right? They think that was an exciting new asset class. It's volatile. They can trade it. And on the other hand, you have the adopters, right? The technologists who believe that Bitcoin is going to change the world, right? And that's the view of a lot of macro guys coming on right now, who don't really trade Bitcoin, but they hold it, right? So what you are seeing right now is because of the advent of derivatives on top of Bitcoin, in the form of BitMEX and all these guys. A lot of the price movement has been is being impacted by these. So what the recent sell-off in Bitcoin, not the one that we are seeing now, the one before this, the previous dip, was by you can see that it was being caused by a lot of people trading leverage products on Bitcoin, right? You can see here the futures open interest, it came off a lot as Bitcoin came off from the highs of 19 over K, right? And the funding rates also came off, right? So this is evidence that the last sell-off from 18,000 to about 16 over 1,000 was due to leverage traders FOMOing into the pump, right, when a lot of institutions came in. But this was met with something very interesting and very different, was that a lot of the Bitcoins, like actual physical Bitcoins on exchanges like Binance, OKX, Kraken, is being swept off the exchange and going to long-term cold wallets where never to see the light again, right? For at least for the foreseeable future, near future, right? And so this is a tale of two very different stories where traders are speculating based on FOMO, and the technologists and the macro guys are scooping it off at the exchange and keeping in their wallet, right? So, of course, the more important players are the actual ones who are accumulating the physical coins. So this is the data that you should be looking at, which is the fundamental for Bitcoin remain extremely strong despite the short-term volatility caused by leverage traders in these exchanges, right? So this actually reaccumulation of Bitcoin is the largest in the past 2 years, and from the blockchain data, you're actually seeing a lot of coins flowing up from exchanges at this point in time. And one of the huge player in the space is Grayscale Holdings, which is sort of the main Bitcoin ETF, founded by Mike Novogratz, right, who was ex-Goldman, and a macro guy as well. The amount of Bitcoin bought in November was way more than a mine supply of 27,000, right? And that is the case today as well. Institutions and Grayscale, they are buying Bitcoin's hand over fist, way more than the supply. So fundamentally, it's extremely bullish, because what you're seeing around now is a supply deficit as institutions' appetite is coming in strong, right? And so the two biggest misunderstandings about Bitcoin. So V, you want to cover this one?
Yes, I think a common misconception is that Bitcoin is too volatile to be used as a store of value. And of course, they say it's to be used as money. There's a difference between money and currency. Money is to be a store of value. Of course, it's also some people assume that because it's money, then it's also supposed to be a medium of exchange. But as we said earlier, because it's on blockchain, if it starts to become used in a lot of transactions, then the cost of transacting becomes very high, and it slows down the network as well. So it becomes almost impossible to use it to transact, right? But again, that can be countered with. It's the same thing as when was the last time any of you actually transacted with gold, right? When was the last time you bought a pizza with gold? Of course, that's the legendary story of some guy who at early stage he bought pizza with Bitcoin, and then he's probably regretting it since then, right? Most expensive pizza in the history of man, right? But what the argument is that, of course, because Bitcoin is extremely volatile, then it's very difficult to use as a medium of exchange. Very difficult. You don't want to buy something when you don't really know what the Bitcoin price is at any point in time. That is, again, as we said, it was not meant to be used as a medium of exchange. It's not designed that way. It's not good enough as a medium of exchange because of the cost of transactions. There are ways around that, but it's essentially that's not the primary attraction of having Bitcoin, right? Bitcoin is currently volatile. Of course, these days, if you look at current markets, in fact, Bitcoin seems to have become a safe haven. When gold is selling off, stocks are selling off. Bitcoin doesn't seem to know that it's supposed to sell off as well. Sometimes it's actually been going up, but the volatility is also a function of the size of the market relative, the size of the trading volumes relative to the market cap, right? Because Bitcoin is has only a market cap of $350 billion. If a significant amount of money comes into the asset class in a short period of time, it will move the market price in a significant way, right? But as more money, more passive hands come into the space, as the market cap grows, the trading sizes will, even if it remains the same, will be a much smaller percentage relative to the market cap. As a result, then the volatility will decrease, and I think that's what we are currently seeing as well, right? We are seeing a general trend down in volatility of this asset class. And of course, if it comes a time where Bitcoin rivals gold, we saw in the month of November, there were record outflows from gold ETFs, right? Gold funds, but also record inflows into Grayscale, for example, the only US ETF for Bitcoins, right? So I think there is an underlying underlying trend where money is moving from old stores of value into the new stores of value. And because of that, eventually, if, for example, this asset class goes to $5 trillion, if you're going to wait for volatility to go down so that you can be comfortable with the asset class, then by the time it's already become a mature asset class, right? And then by the time it's a mature asset class, the capital appreciation is a lot smaller than a lot less attractive than it is now, the proposition. Yeah. And yes, as we said, it is too efficient the more people try to transact in Bitcoin, then it becomes slower, it becomes more expensive. But essentially, that's not the purpose of it, right? I think the most attractive thing about it right now for us is that it's a digital alternative to gold, and gold is not an efficient store of money as well. You cannot take your gold, go to your neighbor and change for something more fungible, right? So that's Nick, what's going on here?
Right, sorry.
Yeah. Okay. So let's move on to the next part.
Right. So for Bitcoin, as mentioned at the start of this webinar, so how do you actually buy Bitcoin, the physical coins? So for those who are based in Singapore, you can go to Binance or CoinHako or CoinNut. They accept both SGD and USD to buy Bitcoins. And for international buyers, for our viewers from other places around the world, you can use Kraken, Gemini, and Coinbase. They are established and reputable, and you can buy via USD. And of course, for the bigger players, if you're institutions or if you are a individual who wants to buy a lot of Bitcoins, normally north of 100,000 USD, then these guys are here to serve you. Cumberland, Gemini have an OTC desk, Kraken, and 8bit, right? So this is where you buy large amounts of Bitcoin. So let's say, so this is the part where it gets interesting, right? Because a lot of people, after they buy the Bitcoin, then they don't know what to do with it, right? Just leave it on exchange. And actually, that's the least secure way to store your Bitcoins, right? Because these exchanges are not like your traditional finance, right? Like Interactive Brokers or TD Ameritrade, where it is under the watch of the US government or SEC or MAS, right? A lot of these exchanges, especially like Binance, CoinHako, and CoinNut, they are run by private companies or individuals without oversight of regulators. So there are instances where withdrawals are locked or coins are being hacked off the exchange, right? And so when people say that Bitcoin was hacked, actually Bitcoin wasn't hacked, right? It's the exchanges that has been hacked, because Bitcoin in the history has never been hacked before as a protocol. It was the exchanges that were hacked and coins being stolen. So advice is strongly don't leave your coins on the exchange after you bought it. So where you can bring it to are what we call wallets, right? And within the wallet space, there are different variations. So it may seem intimidating, but it's actually pretty much okay, right? Because your hot wallet, if you have a Google Play or you have an Android or Apple iPhone, you can download your hot wallet. And the best one amongst all of them is Blockstream Green. Because their security protocol is one of the safest and one of the tightest. So for hot wallet, it is semi-secure as well, because your phones can be hacked and your passwords be stolen by hackers. So if you're just leaving it there for a quick transaction, you can leave it on your phone, but it is still a lot more secure than leaving on exchange. Right. If you have a lot of Bitcoins, or if you're an institution, of course, you can go with the custodian. And of course, this comes with your annual custodian fee, usually 40 basis points or 0.4%. So unless you have some regulatory requirement, then it doesn't make sense to go with a custodian. But of course, they are always there to make sure that your coins don't get stolen. And a lot of these are insured by insurance companies. And then of course you have your cold wallet, which is which is a lot more secure, which is the most secure form of holding your Bitcoins. And the two most famous ones, because they are early in the game, is Ledger and Trezor. So they are secure. Amongst the two, Ledger is more secure than Trezor, because Trezor, actually, if you use brute force attack, you can crack open the code for Trezor. So Trezor is not as secure as Ledger. So for retail guys, you can always buy Ledger from the internet. You can buy it online and they'll deliver to you. And of course, for the maximalists, if you really want maximum security off the grid, then you have Coldcard, which is completely off the grid wallet. But of course, you need some technicalities to use it. You can also buy a Coldcard online, but it's quite intimidating to use. If you're not a programmer, then it's a bit hard. Right. So these are the various ways of storing Bitcoin. Do you have any comments?
Yeah, of course. This slide is intentional to show the difficulty of the whole space, right? In essence, let's just say you are very comfortable with the banking system, the fiat money system, and you know how to invest in stocks, you know how to buy currencies, trade currencies, and all, which is the case with most of the people in the audience. But then when it comes to cryptos, it's very confusing, right? So okay, you can buy an exchange, but you know it's not secure. Of course, it's still secure, but it's just that it's not as secure because there are always possibilities of a hack, right? And then hot wallet is essentially a software wallet on your phone, and then it's secure, but it's also hackable because if your phone gets hacked. And cold wallet is offline. It's a piece of hardware that it's secure, but you have the password, and if you forget the password, you forget the key phrase, which is an extremely long password, then you are basically kind of have no more access to the wallet, right? You can see how much it is, but you cannot spend the money anymore, right? So the world is filled with many people who has Bitcoin but has forgotten how to access the Bitcoins, right? So this is because the industry is it's in infancy, right? A lot of institutions are not in this space, so they don't provide custody solutions. But as recent in the last few months, US regulators have given US American banks the go ahead to become custodian of cryptocurrencies. We see local banks in Singapore progressing with making progress in this industry as well. DBS is a huge local bank in Singapore, recently announced their own crypto exchange, and custody solutions is coming online, right? So it means that it's difficult to get into this asset class, and that's why there's a lot less people than there should be, right? Otherwise, the average person will say, okay, I'm just going to put some of my wealth and try it, because the proposition is that if you put 1% of your wealth in it, if you lose it, it's fine. It halves, it's still okay. But if it goes according to plan, it goes to $100,000, $500,000, it's like 30x, right? The $600,000 is 30 times from here. Your 1% becomes 30% of your net wealth is big, right? So that is the reason why there are so few. I believe is still in early adoption, because there's so many people who are not aware of how to get into this. And of course, the questions has always been, how do I stop my wallet from being hacked, right? You stop it from being hacked by not letting people have access to your device, or have access to your passwords, right? You don't write it down and forget about it, right? That's essentially the easiest way to get hacked. Or you have a spyware on your computer, and then they monitor your keystrokes, and then you essentially get hacked, right? But custody solutions are becoming better all the time. If eventually it'll become as simple as an app with a password from a very secure institution which you trust, and it becomes commonplace to have a digital wallet. And that's why I'm very bullish this space, because PayPal is getting in. A lot of people, PayPal has 100 million users. Is that right? Yeah, and now everybody will soon, PayPal user will have access to a digital wallet that is compatible with cryptos. And Visa recently announced that they are going to introduce a card with one partner, where instead of getting loyalty points or air miles, which in the age of COVID it's really pretty much useless for now, they're going to allow you to accrue Bitcoins for your spending. I think that's going to be very attractive for the younger generation, especially when in the time of history you can collect points where it could be worth more than the spending that you've done in the year, right? So I think eventually everybody becomes very savvy. It's much the same as when bank starts to introduce digital banking. Most people still don't know how you actually get involved, right? Eventually now everybody has an app on their phone that allows them to access their bank transfers and stuff like that. So we are moving towards there, but it's going to take time. Yeah.
Right.
Okay,
So now,
Q&A. Nick, let's start off by something with a small oversight on our part. We did not explain halving at the halving part, so maybe it's good to explain halving in the context of mining and in the context of 21 million Bitcoins. A question is that if Bitcoin has 21 million, how come there's mining going on, and how come there's halving, right? So I think we address that first. Yeah.
Yeah, so halving is a predetermined by Satoshi Nakamoto when he created the protocol that Bitcoin will halve every 4 years at a specific, at approximate day around May.
Okay, so halving essentially means the difficulty of verifying becomes harder, right?
Yeah, by
Yeah.
proof.
Okay. So let me do it with first principle. So Bitcoin was created with an algorithm that says, okay, there's going to be 21 million Bitcoins eventually after all has been created. Okay. So and when at the beginning stage, as Nick says, each because it's blockchain, you for it's essentially a distributed ledger, meaning there's a record of transactions that is held by all the nodes all around the world. Whoever wants to be part of the network, they start to verify the ledgers, right? They start to verify they add the latest transaction to the block, to a chain, right? It becomes a chain. So from beginning to the end, you can trace the where each Bitcoin has been to, which wallet it's been to from the moment it's created. So to incentivize people to do this verification, there's no free lunch, right? There's not going to be anybody wanting to use their computer electricity and their processing power to verify transactions. Nakamoto came up with a clever idea where for you, if you start to verify the transactions, you will get the next Bitcoin that is created in the process of verification, right? So if you start to, that's the mining process. So you use your computing power and electricity to verify transactions, and using a very clever algorithm, you get allocated the new Bitcoins that are being created. Of course, there's an end to this because eventually there has to be only 21 million Bitcoins. And in part of his algorithm is that he puts in the halving algorithm where the processing power required, the difficulty of verification and calculate, the verification process is a cryptography process, which takes a lot of computing power, but it becomes harder at each halving, right? To make it harder to mine the next Bitcoin, right? It introduces a scarcity of feel to it, right? So with each halving, according to the stock and flow model that Nick was showing, surprisingly, it was created for actual commodities. It works quite well for this digital commodity as well, because it predicts the supply, and using the supply, it predicts the prices going forward, right? And that's essentially what we are talking about, right, Nick? Halving. And the next halving is what, scheduled for what, 2024?
For sometime in the first to second quarter.
Yeah. Okay. Cool. Yeah. One question. That what's the difference between Bitcoin and stable coins, and what do you think of stable coins?
It's so Bitcoin is an asset by itself. Stable coins is a derivative of an asset, right? So mostly it's like a USD or Euro, or most recently the Chinese renminbi, right, which has been tested, right? So digital stable coins are basically a derivative on top of an existing asset, which is like fiat. So they're pretty much different because one is centralized and the other one is decentralized. So yeah, so that's the difference between the two assets.
Yeah, also by definition, stable coin is stable relative to the asset that it's supposed to represent, right? So, for example, dollar data is it's claimed to have every coin that is created claimed to be backed by a US dollar at some bank somewhere, right? Which so far remains hard to prove, but it's become so accepted because it's a way to transact during with the crypto exchanges and all, right? But what it does is it's stable. The value hardly changes against the US dollars, and because of that, it becomes a much more comfortable way to transact than to try to transact with Bitcoin when you don't know if it's 18,000 today, or by the time you send to the guy, it's already 19,500, right? So if you try to pay your 18,000 debt with a Bitcoin, you could be paying less or paying more. Pay less, the guy will ask for less, ask some more, but if you pay more, the guy says thank you very much, right? So and another question is, will quantum computing threaten the status of Bitcoin security?
Yeah, so that's a very popular question, right? And one thing that is very heartening about the Bitcoin community is they are very passionate and they are very preemptive in terms of their tech, right? So the community is really developing quantum resistant ledger. So they are already preparing for the threat of quantum. And quantum computing, in a sense, it is still in its infancy because quantum states, they are still not very stable despite the breakthroughs that we have in Google, Microsoft, and what we've seen in China, right? So it is still not very stable to break the Bitcoin crypto algorithm, which is SHA-256 encoding. So quantum is not a threat to Bitcoin in the foreseeable future. But having said that, the community is really developing quantum resistant ledgers. So I think that the community will prevail in combating a quantum future, right? In terms of the tech. So it is a valid concern, but I think not in the near future.
Yeah, so if quantum computing, the way that is, of course, you recently you read a lot of press where China has made headway with their quantum computing, but it's very specialized to do one particular task, right? Of course, but the ultimate quantum computing is able to break all cryptography that mankind has created so far, and Bitcoin will release the problems, everything will be hackable, right? And there's no secrets anymore. I think we could come to the stage, but I think everything else is a problem as well. Your DBS account also will have problem, right? Okay, let's just take a few more questions. We have a lot of questions, and we'll try to address some of them. But anything that we cannot address, we will try to address on our social media in the days going forward. Okay, so let's say this. Okay, so we have this very question from Cindy. It says, "I've forgotten how to retrieve my Bitcoin. So what can I do?" I like this because I'm so sorry for you, right? If you do not know the password, you do not know how to retrieve it, it's basically quite game over, because that's the beauty of Bitcoin, right? It's unhackable. It's unhackable without a password. So without a password, you are. So what I do is I keep copies of my password at different places. So it's a very long password, right? It's basically, if you use Ledger Cold Wallet, which I use, you have a phrase, like, I can't remember how many words it is. It's a lot of words. Is it 21 words?
28 word mnemonic phrase.
28 words, right? So using these words, you can reset your passwords, right? So they allow you to create a password that's not 21 words, that is easy to remember, right? So without, so you've forgotten a password, you need your 28 word phrase, which is the one that you cannot forget. Don't save it on your computer, because your computer can be hacked, right? So what I do is I save it, I write it down in different places, but not all at the same place, right? So what happens if you come to my apartment, you have to go and look for a few places to put the phrase together, and then but it's maybe it's not all in my apartment, right? So you have to have a few trusted places where you can store your password, or you have good memory that you remember 28 word passphrase, right?
Yeah.
But the world is full of people who have forgotten how to access their Bitcoins. I do have a friend who bought Bitcoin in very early stage, even before it was $100, but he's forgotten how to access it. And it's, he has 1 or 2 Bitcoin, which is still a lot of money. Unfortunately, that's the case. Okay, we have this very interesting question. Does the value of Bitcoin change from country to country?
Yes, it does, and that is one of the businesses in trading. It's where people arbitrage the bitcoins from different countries. So, in countries like Venezuela, in South Africa, Argentina, bitcoins are trading at a very good premium. In South Africa, it's about 8 to 10%. And in Argentina, it's about 20%. You can get about 20% premium relative to Bitcoin because these are places. So basically, places with capital controls, Bitcoin tend to trade with a good premium there, right? So
Yes.
they
Yeah.
do, yeah.
They do. So Bitcoin has different value in different places, but the catch is that the places where it's worth more than other places, for example, Iran, where else, right? Venezuela, is because there is a difficulty in getting money out of those places in the first place, right? And there's a reason for that as well. We have capital controls, or the money is being devalued in real time, so people will try to buy Bitcoin at whatever price to save themselves from having to buy bread at a billion pesos, right? So that's essentially what happens. It's not easy to take advantage of these high prices because if you change with those guys, you're either putting yourself at risk with the sanctioned countries where you're trying to transfer money out of there, or you suffer the inflation, high inflation of the local currency. Unfortunately, we still have like a lot of questions, but we will save those questions and try to address them over our social media in time to come. If you have problems, you can also email us, and we'll try to address those things in the days ahead. Well, let's move on to the next section segment, which is the panel discussion.
Right.
Before that, Nick will maybe.
Yeah, so before that, track record, we do have a Slack community where we talk about trade opportunities outside of Bitcoin as well, including Bitcoin. So mostly global macro. Myself, V, and we have a bunch of professional traders in there where we discuss key market developments to keep you guys ahead of the game. So yeah, so we have a special offer for everyone here tonight if you join us. So yeah, so I'll move on to the next section. So V, yeah, you can take it.
Okay, the panelists, let me just introduce the panelists. The panelist is Justin Chow. I've known him for about more than, about 10 years. 10 years, I knew him when he was a credit trader at a hedge fund in Hong Kong. And then he's a superb poker player. He found a job at a hedge fund, a global macro trading hedge fund, because he met his boss at a poker table. Impressed the guy so much, he got a job offer. And he's since then he's moved on to Cumberland DRW. He was at the global macro trading desk at DRW, and then he took the dive into crypto assets, and now he's a global head of business development and relationship management for Cumberland, which is the biggest market maker for crypto assets in the world. One of the biggest, not sure who's the biggest at any point in time, right? But so he's very clued in and as to how the institutions are moving forward in this space, and we will ask him questions about that in a bit. And the other panelist is also one of my good friends, Daniel Wang, and I've known him since our time in JP Morgan, New York, when he was just an FX options trader, and he's gone on to work at Merrill Lynch, trading US rates, which is one of the biggest US interest rates books in the world at BOA, Merrill Lynch, and then he joined me at Morgan Stanley as a senior trader, and after that, he went on to co-found a global macro hedge fund in Hong Kong. And since then, he's moved on to this exciting space as well. He started working on Great Southgate Asset Management. For those who are Korean, you'll know Great Southgate is a big deal in Seoul. So he's recently launched his Bitcoin fund, and are you guys online? Yeah, so you can start unmuting yourself and show your faces, right? Yeah, so
Hey Nick. Hey Dan.
hey, hi Justin. Justin is the guy with the long hair. He's hasn't cut his hair since the start of COVID crisis. He's hunkered down since. Okay, so let's move on to the panel discussion. Nick, you have some questions for us?
Yeah. Hold on.
Nick, are you there?
Sorry, some technical issues on my side. Yep. So hi guys. So for the panel discussion tonight, we have the first question is, what is the Bitcoin and cryptos industry landscape at this point in time?
Well, I think you guys did a good job of touching upon a lot of the topics. For example, the sources of liquidity available for people in the industry. I go one step deeper and actually comment that a lot of the exchanges in the crypto space from the last sort of 4 or 5 years are actually unregulated, and then there's been a new birth of regulated exchanges in the last 1, 2, 3 years. So now what we're actually seeing is that the crypto space and the liquidity venues in the early days were started by, as you mentioned, like technicians and folks that understood how to build things in an unregulated environment. And as the mainstream institutional investor takes interest in crypto, a lot of the regulated service providers like the CME exchange in Chicago have pivoted in. Bakkt, which is an exchange created by the ICE exchange, has pivoted in. So now there's a bit of a bifurcation between unregulated and the regulated exchange space. It's quite interesting, and I think nobody knows how that's going to unfold going forward. A lot of the retail activity and volume takes place on these unregulated exchanges, and then there's the new wave of institutional capital that is trading via desks like ourselves in the over-the-counter space or on the regulated exchanges. And so as we see more institutional money come into crypto, it's likely that they'll gravitate towards doing business in regulated environments and whatnot. So that kind of covers a little bit about the liquidity venues. As V and Nick, you guys mentioned that Cumberland is an over-the-counter trading desk. So there's the exchange model, and then there are these OTC desks, which are essentially trading desks run by humans that you can interact with, and similar to going to a bank and trading FX or others regulated securities, you can come to a big desk like ours and buy and sell large amounts of crypto. And our job is to essentially provide good pricing and to manage that liquidity for our counterparts. So we trade with a handful of crypto hedge funds and now a new wave of institutional hedge funds that you guys touched upon. And we've got electronic solutions like an API that ATMs and a lot of the payment processors access our liquidity through. So that's very automated for them and scalable. And it's our job essentially to provide an on and an off ramp into crypto liquidity, similar to what you get in the institutional world. So guys like myself, as you mentioned, have come and pivoted into our business to help build these solutions that traditional asset managers and market participants are used to seeing in the markets that they've traded for their whole career. So it's difficult when you have a 30-40-year-old fund 30-40-year fund manager who's trading through Goldman Sachs and JP Morgan, and then you tell him he's got to send his passport in to a random website and buy and sell crypto there. It's a lot different than telling him to come and do business with someone like myself or like Dan, that speak the same language, same kind of background and experience. And then, of course, a firm like Cumberland DRW that's been around for a while with, strong reputation and whatnot. So we're just doing our best to try to recreate in many ways a lot of the infrastructure that enables these institutional investors to be able to participate in our market. And that's an exciting thing. That's what, I wake up every day excited to do. And to see it starting to come to fruition this year is very rewarding, right? In many ways, a lot of the effort we put in the last 3-4 years is paying dividends now, not just for us, of course, but the industry participants as well, because all these big players pivot in, and the early guys like V, they benefit from that when the price gets starts moving. So that's kind of where we are now. And then there's the custody solutions you guys mentioned. I think you did a good job covering that. And so the only point I'll add is that there's more institutional grade custody offerings popping up nowadays, and the one that obviously comes to mind that people have read about in the news is Fidelity Digital Assets. That's a household name in the asset management industry. So to see them spend years building their solution is pretty exciting. And then I think more recently in the public news as well, there was an announcement that Standard Chartered Bank was launching a custody solution. So I think it's interesting when we think about custody and some of the solutions you mentioned, Nick. It's again very difficult to tell a 30-year veteran reputable fund manager to stick his client's assets on a Trezor managed by an ops guy and his team. It's much more palatable for him to work with someone like Dan who has built these solutions, or to use one of the names that's has a history in traditional financial markets. So again, we're starting to see more institutional solutions, and I think that just bodes well for the space. I expect that to continue in the next year or two, and I also expect more banks to potentially be pivoting into crypto over the next few years as well. So it's going to be interesting. It's going to be exciting.
Right. Thanks, Justin. Dan, what's the landscape in terms of crypto asset management?
I think it's developing pretty much lockstep with many of the other financial services that Justin outlined. So when you talk about asset management, usually you're thinking about funds. I think Grayscale is kind of the poster child for digital asset management. I think at this point they're in the 12 billion AUM type range. Their inflows continue to break records every quarter. But there are other reputable asset managers that are also creating their own funds. I would say most of these funds for now, including our own, are really just for accredited investors. I think the space is really eagerly awaiting an ETF, and there's been many attempts at getting an ETF approved with the SEC, but they've all fallen short. But if you go and look at what the SEC is concerned about, a lot of these issues are starting to get addressed by all the developments that Justin's been talking about. And so my personal view is we're probably not that far away, because I think the SEC wants to approve an ETF at some point. It's just they need to get more comfort that these issues are being solved, and I think they are being solved. And so I think that's going to be kind of the next milestone. And then if so, we're looking at a lot of potential retail participation just from brokerage accounts, and that will be another exciting development. So I think there's still wood to chop with respect to developing the space and getting it more institutional and getting it more widely available. But I would say that in the 3 years that I've been in this space, I think we're pretty ahead of schedule actually versus where I thought we'd be at this point in terms of how much development there's been, investment into the space, and now the types of world-class investors and thought leaders that are getting behind it. That's quite exciting.
Right, and with regards to the regulations and the different types of investors coming in, what types of crypto investors do you see coming to the space at this point in time?
Sorry, what can you clarify what you mean by that?
Let's say institutions and retail. What's the flow do you see? Do you see a lot of institutional players coming in at this point in time?
Yeah, I think if you just look at the news cycle, it's almost like there's someone new every day. And probably Paul Tudor Jones is kind of the one that broke things open a bit, and then you had Stanley Druckenmiller, and now you got Legg Mason, Alliance Bernstein, BlackRock, Ray Dalio, and his AMA is kind of turned his ship very quickly. Actually, it seems like, and I don't know who's left. In terms of you need to be convinced, right? At least within the institutional investor space, and I feel like at least in terms of attitudes, we may have reach some sort of escape velocity, where, investors will have to, institutional investors and the ones that, have to stake their reputations, they have to make a conscious decision now, whether to get behind this or not. And it's sort of like, do you want to be on the wrong side of history on this one? So I feel like we're kind of getting to the point where I don't think we're there yet, but we're kind of far along in terms of, it may reach a point where you're going to look like the odd one out if you're not, giving at least, some credence to what's happening, with respect to the space. And I think, Justin can probably, from his viewpoint, he sees more of the flows, and so he, has more of a firsthand knowledge of the types of, investors that are engaged in the space and buying. I imagine that, some of those flows a lot of those flows are not really public information, and, we don't know. There's probably things that we don't know that are happening. But yeah, I think there's a lot of growing interest very quickly in investments into the space.
Right, Justin, since you're at the choke point of the flows, can you give us some color on how this year is different for institutions as compared to 2017's bull run in Bitcoin market?
Well, I think you hit a big, hit a big nail on the head, Nick, when you talked about the stock and flow chart. And certainly within our business, we've seen a lot of, new market entrants coming and acquiring Bitcoin in very, very large sums. And those coins are not, they're not leveraged trading positions. Those are coins that are taken and they're put in custody, and they're very long-term holders. Essentially, acquiring these coins to hedge against monetary debasement and some of the things that V talked about. These are the kind of astute investors that pay very close attention to monetary policy and, are acting in response to the tremendous stimulus package that was introduced earlier this year as a result of COVID-19. And, in many ways, acquiring these coins in response to, future potential stimulus packages that may affect the U.S. dollar as reserve currency, or any one of the topics you want to talk about. Any one of these major macro themes that are fairly widely discussed nowadays. I think a lot of these folks are looking at buying these coins in response to that. So it's certainly been an exciting time for us to see these prominent names come on board and talk to them on a daily basis, and see them in action. Probably reminds Dan and V of their time at a bank when they were on the other side as well, trading with some of these guys in the rates market. And I think also when we talk about the type of investors that are getting involved, and Dan talked about escape velocity, I think he makes a really good point that a lot of these prominent names that are commenting on crypto now, or potentially even changing their views, and who were once very critical and now are more accepting of the idea that Bitcoin may have there's a chance that Bitcoin may play a role in the financial system in the future, or digital assets, let's call it. With every one of these guys that sort of pivots, all the other investment professionals around the world that sort of live off of the comments that these guys make on CNBC and Bloomberg, they start to change their views as well, right? Even my dad, is asking me about Bitcoin nowadays. Probably means that high is in, but even my dad asked me about Bitcoin, and back in the day he had no interest, right? So I think it's super interesting, and you get that essentially that waterfall effect where through word of mouth, a prominent investor is now known that he's looking at the space, and then everybody else wants to know what that investor is doing. In fact, I just got off a call right before this webinar where I spoke to a prominent investor who was a partner at one of the largest investment firms in the world, and he now runs a family office. But without a doubt, he's got a gigantic network, and I'm sure he's talking to a lot of his friends about his positions in crypto that he's acquired over the years. So it's really interesting, and I think the news flow, we've kind of reached that S curve on the news flow, where I certainly expect that over the next few months and years, we're going to see more and more comments about big investors taking a look at the space, and that's definitely what we're seeing in our business. Not only the folks that are acquiring coins, but the types of conversations we're having with, you know, the largest asset managers in the world is very interesting as well. Some of them have 5-10 person, you know, crypto or blockchain teams now, right? That they may not be investing directly, but they have teams of individuals internally that are very interested in crypto, and you know, they are doing research on behalf of the firm, anything from the technology to if they were to start a fund, what would it look like? And so I think it's quite interesting. And as you know, crypto becomes more acceptable, certainly you're going to see the amount of capital on the sidelines that's exploring the space start to dabble in the industry, and that could be, you know, that could be very exciting for us in the coming years.
Right. So question to you guys, Justin and Dan. Where do you see sovereigns on the curve? Do you see, like, because like sovereign funds, like recently Larry Fink from BlackRock had a conversation with Mark Carney on Bitcoin. Do you think at some point in time they will come in the future?
Yeah, I mean, if you think about the spectrum of capital in the world, you know, the riskiest capital is always, you know, the mom and pop retail investor, and then there's venture capital and different types of alternate investment vehicles like hedge funds that are fairly risk tolerant. And then you know, on the other side of the spectrum, the most patient and most reserved capital in the world, and that's generally sovereign wealth and pensions and endowments. So the sovereigns that you're talking about are on this side of the spectrum. So it's possible that they may look and want to acquire a reserve of Bitcoin. There's certainly a lot of speculation about that, especially some of the more progressive economies in the world. But in my mind, you know, that pension, endowment, and sovereign wealth capital base, which is very large, is also some of the most conservative and slowest moving, because they're the custodians of retirement funds, of the citizens of the economy. So they have to, you know, essentially be as conservative as possible. So I would imagine that they would take longer to pivot in than some of the guys in the middle, even, which are more the long only asset managers, and then guys over here, which is more the active hedge funds, et cetera. So I think what we're seeing is the active hedge funds like Paul Tudor Jones and Stanley Druckenmiller. He's a family office now, but one of the most famous hedge fund managers in history. They're dabbling, right? That's public news. They've come out and talked about it on CNBC. And then the next thing I think we're going to see is more of the long only guys over the next year or two dabbling, and then potentially further down the road, some of the more conservative capital.
Right.
So yeah, here maybe Dan, you can address. So we've just been talking about you know, private wealth and strong hands coming in with the buy and hold strategies. What other kind of trading strategies do you see being employed in this space right now?
So I think traditionally speaking, the kinds of trading that has been popular in the space has kind of revolved around market making. You know, whether that's, you know, token specific market making or market making on exchanges, you know, providing liquidity. I think that you know, in terms of the types of trading that you know, maybe the day traders or the more speculative traders do. I mean, there's, you know, these assets are you know, hit the sweet spot for, you know, more technical traders, because honestly, you know, trying to analyze the fundamentals, you know, with respect to, like, say, Bitcoin, yeah, you've got stock to flow, but that's probably not something you really want to trade, you know, base your trades on. So it tends to be a little bit more technical in nature. What's interesting about this space is it's very grassroots, and so it's the younger generation, the ones that are more open to embracing, you know, new technologies and new ideas, that are going out on their own and creating actually a lot of really interesting, you know, analytics and looking at a lot of different types of data and you know, finding ways to help people visualize what's happening. And I think some of the charts that you put up, you know, for example, looking at exchange flows, like, you know, is that fundamental? I don't know. Like, maybe that's technical, maybe that's fundamental. You know, maybe that can be, you know, overread in terms of what it implies for the market. I think there's, with respect to, like, say, Bitcoin, I think mining econometrics is pretty important. And Nick, that's, obviously something that you're very familiar with. Understanding, who all is in the mining space, and understanding their cost curves and revenue projections, and that sort of cost of acquisition of those coins can act as some sort of fundamental basis for understanding value for Bitcoin. And so I think if you dig pretty deep, you start to realize that there are actually kind of interesting fundamental dynamics going on with respect to these assets, and I think these things can all be used to trade. Certainly in our company, we look at quite a lot of these different types of analytics, and we try to find a way to systematize it, to understand where the market is overbought and oversold. I think in the future, this is a very fast and dynamic space. I think especially as new entrants come into the market, when you have those large buy and hold investors coming into the market, like, that's going to change the pricing dynamics. I think how regulators are kind of coming after exchanges, or some exchanges, I think is also going to kind of change some dynamics. And so into the future, I think it's the trading strategies that will work or be deployed. I think it could evolve quite quickly. So that's one of the exciting things about being in this space.
Yeah, cool. So a question, right? So we've seen the rise of decentralized finance, where people, they pledge their coins to get high yielders. What do you guys think about this space?
Justin, you want to?
Yeah.
Yeah.
So I think it's an interesting technological development, and if you think about financial innovation, it's pretty exciting what these innovators have been able to do on some of these protocols. I think the major concern and difficulty with the DeFi space today is going to be the KYC and the AML element of who you are actually facing when you transact. So I understand the concept of pledging your your coins to a smart contract that is managing that liquidity if you're an automated market maker. But at the end of the day, when you're buying and selling coins, you actually don't know where they're coming from, and that in traditional financial markets is a very, very important point that regulators focus on through various licenses and whatnot and requirements. I mean, even for us, for example, when we onboard an entity, we put them through a very, very stringent KYC and AML process and deploy technologies to verify transactions, to get comfortable with the source of the funds, and et cetera. And so that is somewhat circumvented in the DeFi space. It'll be really interesting to see how the innovators can adapt to the fact that regulators are probably concerned about that. So it's hard to tell, what the future will look like. Again, it's an interesting and innovative financial technology, but to operate in the world that we live in today, it at scale requires playing by a set of rules, and so that's kind of where we are right now. But I guess you could also say that a lot of the emerging technologies in the world were created first in sandbox environments, and then even in the banking world, right? And then of course regulators came in to protect market participants essentially from themselves. So it's probably natural for that same evolution to occur here in the crypto space as well.
Okay, cool. I guess we just move on to some questions that we couldn't address earlier, right? There's an interesting one about mining. Maybe Nick, you can take this about mining. Will there come a day where after 21 million Bitcoins have been minted, what happens to the mining industry?
Right. So,
so to start off, one question is that, is it still a profitable game, this mining gig, right? Is it still a profitable
It
gig?
depends on which jurisdiction you go, right? If you mine in Singapore, it's confirmed lose money. So
It's
places,
dependent on electricity cost, right?
and there's a lot of excess energy like Kazakhstan, which where I'm in. They have a lot of excess energy that cannot be transported to Russia. And because the country is really vast and the coal and natural gas is really close to the ground, so there is a lot of excess energy there, and that's where miners are. So depends on the cost curve, as Dan said. Only a few countries in this world make sense to mine right at this point in time. So yeah, Kazakhstan, in China.
Yeah, so what happens to mining after 21? The 21st Bitcoin is minted.
Yeah, so more than 80% of the world's of the 21 million has already been mined. The last Bitcoin mine will probably be after we die because of Satoshi's brilliant halving protocol. So for miners, they have two incentives, right? One is for mining for block rewards, and the other is for transaction fees. So I'd imagine in a world where there is no more Bitcoins to mine, miners will still be mining for transaction fees, because then if Bitcoin follows the stock-to-flow trajectory or the trajectory of hyper-Bitcoinization, where there's a lot of adoption, then there's be a lot of transfers in Bitcoin, and that's where miners will live off, is the transaction fees in the future. So yeah, so transaction fees will be the one to incentivize miners after the 21 million has been mined.
So your target for Bitcoin is what, 600,000? from your stock and flow model, right? The 600,000.
8 cents. It started at 8 cents, so it's it's not out of reach, right? So yeah.
Okay, cool. Yeah, I think that's pretty much. Oh yeah, so maybe for Justin and Dan, do the established institutions, are they looking at anything besides Bitcoin?
I guess the key question here is who would you consider to be the established institutions? There's a number of say Silicon Valley VC funds that look at all kinds of new blockchain technologies and projects and coins, and there's endowments that have invested with crypto funds that invest into many different types of coins and projects. So at face value, I would have to say that there are a number of established institutions that are investing into many of the quote unquote altcoins, either directly or indirectly. The phenomena that we're seeing more today is really oriented around Bitcoin. And that's because Bitcoin has really separated itself in terms of being very institutional in nature. So if you look at anything from the custody to the trading venues, the fact that with an established institution's existing futures account, they can get onto the CME and they can buy and sell Bitcoin futures. Even retail can get onto Interactive Brokers and buy and sell Bitcoin futures. So, with respect to, the kind of institutional involvement that we're seeing today and the kind of things that we're hearing, from a lot of these well-known investors and thought leaders, it tends to really orient around Bitcoin. And I think that's also driven just by the macro dynamics around money printing. I believe that Bitcoin is probably the only cryptocurrency that has a store of value proposition. And there are thousands of cryptocurrencies out there. And I think it's very clear there's only one that has a store of value proposition. Everybody else has to compete on utility. I think Paul Tudor Jones did make a mention of Ethereum recently. I think that is kind of a game changer. The way I tend to explain to our clients about Bitcoin is, think of Bitcoin like gold and Ethereum as oil. what was the value of oil 200 years ago when nobody knew what to do with it, versus today where, there are huge industries, built upon it, and it runs many mechanical, devices around the world or vehicles. Ethereum, if it can ever figure out, and this is what they're trying to do with 2.0, if ever can figure out the scaling issue, and be usable, create that utility for a lot of applications for blockchain, and ends up being, that sort of engine or fuel for blockchain applications, then I think you'll start to see institutions kind of look at, hey, we're on Bitcoin. What's the next thing? And so I think Ethereum, of all the other altcoins, is probably the one that is most likely to be looked at by institutions.
Right. So, okay, since you brought it up, right? Ethereum 2.0, is it going to be? It's going to work or no? What do you think? Is it going to start it's going to be good for Ethereum, right? Do you think in the future it's going to work? Is it looking good so far?
I think if what Ethereum has going for it is really its network value, just the massive community of developers and thought leaders that are involved. I think 2.0 is a massive technical undertaking, and it's going to take a long time before it's all the improvements are implemented. So it's quite unknown, I think, at this point. But at least the Beacon chain is launched. It kind of finally sort of on some sort of schedule and sort of on track. But to accomplish, I think, like in macro, there's this sort of like impossible trinity concept. It's like interest rates and exchange rates and inflation, so on and so forth. It's that kind of thing sort of exists within blockchain in terms of scalability, speed, cost effectiveness, decentralization. Like you want all these things, and you want it all in one protocol, and but these there's a lot of these things are counter to one another. So creating a solution that can handle all these things for millions of, hopefully hundreds of thousands or potentially millions of TPS, like we won't know until we see it, and that's, I guess, part of the excitement of the journey is seeing if humanity can kind of figure a way of accomplishing that.
Okay, very good. It's very interesting. I really like your comparison of Ethereum to oil, right? Most people compare Ethereum to silver. I think that's a little bit off, right? To oil is correct. I think it's a better analogy, I think. Okay, anyway, thank you for your time, Dan, Justin. Thanks for taking time out from your Thursday evening to chat with us about cryptos and Bitcoin. Hopefully, we'll have more conversations going on in the days and weeks ahead. We see a lot of interest in cryptos these days, and actually a lot of the macro players, old school macro players that I speak to, essentially dismiss me every time I make a mention of Bitcoin or cryptos, right? Basically, I'm like the crazy guy with a random trade idea. Suddenly now they're very interested. Even their targets are even more ambitious than mine, strangely enough, because I think they see what Justin and Dan mentioned is that the industry has reached escape velocity. The developments reminds me a lot of maybe exactly of how in emerging market, when I first started trading Korean won out of Seoul in Korea, essentially it's kind of like this. You only have the Asian traders trading it, and maybe one random guy in New York and London, right? Essentially, as the market grew, then almost every fund decided to allocate something to the space, and they started buying Korean bonds, Korean equities. Of course, everything became a part of the benchmark, and eventually it's just one of the most traded Asian currencies we have now. So with that, I think we will wrap it up. I'm sorry for all the questions that we didn't get to come to address. We will address it on our social media in the days ahead. Thanks everybody, but please stay for a little bit. When we end this thing, there'll be a survey for you to just jot down some of your feedback so that we can continuously improve, and sign up for our mailing list such that you can be kept informed of our events going forward. We will have a webinar on equities and basically stock markets in the environment of a global macro environment going ahead. We have some calls of what sectors will really do well in the years ahead, just next week or so. So sign up for that, and keep in touch, everybody. Take care. Thanks, Dan. Thanks, Justin. Thanks, Nick, for moderating
Nick
the
and V.
panel.
Thanks,
Take
guys.
care.
All right, thanks.
Cheers.
Good night.
Bye-bye.
Okay, good night.
You guys.
Bye.